Welcome to the weekly video that I like to call the Deep Dive. This video is designed to look at the charts that I may not have used in the videos over the past week. Sometimes they may have made an appearance in one or two videos. We don't look at these charts all the time, but we still might find something useful by looking at them on a week in and week out basis to see if they can provide us with any additional insight. This is being prepared for Monday, January 23rd. The first one that I want to show is just Friday's session. We had a pretty strong up day, and if you look at the very top, you can see where growth had a really good day. It was up 1.91%. Value also had a good day, but it was up less, 1.71%. However, in the mid caps, value outperformed growth, and also in the small caps, value also outperformed growth. And this is a real story that we've seen in 2022 going in now to 2023, and that's why the market is really coming under a lot of pressure. Another chart that we look at from time to time is the VIX, where we plot an RSI 9 period on that, and we look for overbought or oversold indications. We can also look at this when it's below 50, that means it's more in decline mode. When it's above 50, that means it's going up. Now the VIX is counterintuitive. When it's going down, that means the market is going up usually. And when it's going up, that means the market's going down. Right now, we're not getting any kind of a real extreme reading. We're a little bit below 50 after seeing the VIX really decline lately, even though the market experienced some downward moves over the last week. However, Friday helped to repair a lot of the damage that was done. Another thing I like to keep track of is what I call the retracement from the high. We set the high back in early January 2022, and we've been having a lot of trouble ever since, and we're still down 17.56% going back to the all-time high. Another chart that we look at, and I do include this in some of the videos, this is the RIDEX bear-bull ratio. When this is really going up, that means folks are getting into bearish mutual funds, or the bearish mutual fund that RIDEX has. When this is going down, that means more folks are getting into the bullish fund. So you look at this in a similar way that you would the VIX. When it's going up, we're more negative. When it's coming down, we're more positive. You can see from 2020, 2021, and the early part of 2022, most folks were in the bullish fund because we were really doing well during that time. Well, when we started to hit a lot of trouble in 2022, we've been bouncing all over the place, and a lot of folks are reversing their stance on things. Unfortunately, folks that use that method to invest, and I use these mutual funds personally, they tend to react to what's already happened. And we've been in really choppy environments lately where folks are ending up doing exactly the wrong thing at the wrong time. We have an up day, so they get in the bullish fund, only to see the next day go down, so then they get in the bearish fund. Well, then we see the market going back up, and so they're ping-ponging themselves in and out of these positions and pretty much losing all the time because they're chasing what already happened instead of having a real proactive stance on the market and getting into things as they are happening. Another area that I keep a real close eye on is support and resistance. Here's the Ichimoku cloud. I had been focusing on this quite a bit when we were down at the 3,800 level with the S&P. We've since come up off of that when we're more into the green cloud. So it's turning a little bit more positive this way. I really won't pay attention to this chart too much unless we decline and go back down and test this 38 level and then see if we're able to hang on to that or if we bounce up from there. Another thing I look at, and these come out every day, but this is just for Friday. The list would be too long to show this in one continuous screen here. I just look at Friday's technical alerts, and these are pre-configured alerts. When something happens in a major market index, usually you start at the bottom and then work your way up because the earliest alerts usually come and then it lists the newer ones on the top. First of all, the S&P did get above 3,900. The NASDAQ initially started out below 11,000. It got below 10,009. We had an ETF bearish cross, MACD crossover with the financial sector. The NASDAQ then rebounded and got back above 10.9. It got above 11,000 and then eventually 11.1. We also saw the Dow getting back below 33,000, and then consumer staples had a BPI cross above 50, and that's considered to be from negative to more of a positive stance. Another thing that we look at is the technical score of the major indexes. And I have 5 indexes that I look at: the Dow, the S&P, the NASDAQ 100, small caps and mid caps. Well, right now, the mid caps are doing about the best. They have a score of 71.9. Now, this score isn't anything really great, but it is doing the best out of all of the indexes currently. The next chart that's doing a little bit better are the small caps, and that comes in at a score of 57.8. In third place is the Dow, which had been in first place for quite a while. It's seen some real weakness. And then this past week when Goldman Sachs came out with their earnings, that was not well received. The Dow really tanked even when the rest of the market was up. And so it added some real technical damage to the Dow chart. And this is based on the diamonds, which is the ETF attached to the Dow. It's coming in at a score of 46.9. In fourth place is the S&P 500, the one that I focus on the most and I do all the strategies on. This one's coming in at 30.8. And then in last place, which is under 10, and it's really done a lot of damage. Even though the NASDAQ 100 has been improving, it still has a pretty dangerous looking chart, and it comes in at 8.4. This is the QQQs, which are the ETF attached to the NASDAQ 100. Another thing we look at is trend analysis, and I have a chart of the ADX that I show in every video, but this is the Arun, and I also like to look at this. What's happening? Are buyers in control or are sellers in control? Right now, we're not really getting anything from this particular chart. We're seeing a decline in both. The red line is selling, the green line is buying, and then there's an oscillator down below that measures the difference between the two. And for the last number of days, actually for about a month now, this has pretty much gone sideways. It tends to be more negative because it's below zero. Another thing we look at are some short-term indicators. This is a short-term rainbow chart. It's just a 10, 20, 30, 40, 50 simple moving average plotted in different colors. It looks kind of neat, but sometimes we can get some useful information from this. Not as much in 2022. That's why I don't show it a lot in the videos, because we're chopping all over the place. And this ends up looking more like spaghetti than anything, and it's not really telling us much. But when it's slicing through the rainbow either up or down, that often indicates a real shift. Another thing that I tend to show a lot in the videos, but I haven't in the last few, is accumulation distribution. If a lot of people are buying, that helps accumulation. If a lot of people are selling, that helps distribution. Well, overall, we remain positive and we're above this moving average. That's looking a little bit better and is somewhat positive. Another short-term indicator is called the Force Index, based on the S&P 500. And we're positive. We're a little bit below the zero line. We're not giving an extreme reading. The chart is currently green, so that's more positive in and of itself. This is a chart that's very simple. I actually created this myself. It's just the 20 period simple moving average of the open, and then another one of the high, the low, and the close, and then plotted on this line. Sometimes these can provide support or resistance. And I plotted this. I followed it for quite a while. You can pause it and look at this. We don't really use this to make decisions. Again, it just kind of gives us some focal points to look at. When we're going up and then we see a retracement, a lot of times it will come down to one of these moving averages and then find support and then go back up. And that's what happened here. When we're going down, we might see a recovery bounce that goes up into one of these moving averages before it turns and starts heading back down. And that can just provide a useful visual tool. Another thing we look at is standard deviation. How far is the current price getting away from the standard price or the average price? When we're really getting far away from this blue line, which I consider to be the midpoint, when we're above it, we're having a tendency to go up. When we're below it, we're having a tendency to go down. Right now, we're below the standard deviation price. Another thing that I look at, and this is one of my favorite indicators, the drawback to this is if you get a signal, it can really turn against you for a long period of time before it goes back in your favor, and that can really wreck on your emotions. When the dots are above, that means we're declining. When the dots are below, that means we're advancing, or it's signaling an uptrend. Currently, even though we saw the retracement this past week, the dots still remain underneath, so it's positive. The mass index, we're not getting a signal from this now. When we really look at this is when we're rising up and we go above this red dashed line, and then we eventually cross above the blue line, and then the actual signal is triggered when we cross down below the dashed red line. And whatever way the market's moving at that time, we're looking for some kind of a reversal at that point. Well, it's not generating a signal right now, so it's really not very useful. Another thing is the boom indicator. How far are prices getting away from their 50-period moving average? Because when prices get far away, the moving average acts like a rubber band or a magnet, and prices have a tendency to come back. And I called it the boom indicator because I was attending a webinar one time and somebody was describing this, an indicator that I've used for many years, and saying, boom, 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 here's all these great opportunities. So I just picked up the name boom indicator. We're giving more of a neutral signal with slightly positive right now. The red arrow is where the current prices are. And then down below, this is a 200-period moving average. It's a little longer term. I do have another version of this chart that plots the 20-period moving average on here, but I just haven't included it. It can also be helpful in determining shorter-term overbought and oversold conditions. And that's mainly what I use this for. When we're above the zero line on both of these, we're more positive. When we're down below, that's more negative. So on this chart, we're a little more negative because we're slightly below zero on the 200. On the top chart, we're basically a little more positive because we're above the zero line. Another thing that I look at, and I do use this from time to time in the daily videos, is just the highs minus the lows. This is a one-day version. I also have a 5-day version of this that I use. When we're above the zero line, that's more positive. When we drop down below zero, that's more negative. But what we really use this for is really extreme readings. When we get extreme negative readings, that can mark a bottom. When we get extreme positive readings, that can mark a top of some sort. Another thing, and I do use this from time to time, this is a double exponential moving average, that's the blue line, and a triple exponential moving average. It really tries to smooth this out so you don't get whipsawed as much. And then this red line going through the chart is an anchored moving average going all the way back to the COVID low set on March 23rd, 2020. Right now we're positive because price is above both moving averages. When the red line, that's the triple, is above the blue line, that's more positive. When the blue line's below, that's more negative. But you can see that there are some variations of that. Another thing that I use is a variation of the RSI, the Relative Strength Index. This is called the Conners RSI. And again, I'm really only looking for three things here. If we're above this dashed line, that's more positive. If we're below it, that's negative. When we get above 90, extreme positive. When we get below 10, extreme negative. Other than that, I really don't consult this chart all that much. Here's another rainbow chart from 50, 60, 70, 80, 90. This also helps to show us what is the intermediate term trend doing. And my definition of an intermediate term trend is weeks to months. And we've really had a difficult time in 2022. So far, 2023 is not starting out much better. But we just look at this and sometimes it gives us some visual insight as to what's happening. The Chaikin oscillator, when it's above zero and advancing, that's more positive. We're also looking for extreme readings, either to the top or extreme at the bottom. We're not getting anything right now. It's still in a downtrend. It saw some of the weakness earlier in the week, but it is turning back up after Friday's session. Then another thing we keep a close eye on is volume. When this is going up and the histogram is going up, that means volume is increasing. When the black line and the red line are decreasing, that means volume is decreasing. We really watch that because that can provide us some idea of the magnitude of a particular move. Another thing is the vortex indicator, and I use this quite often in the videos. I just haven't shown it in a few days. Even when we were seeing some weakness last week, we were still positive with this indicator as long as the green line is on top. It bounced and recovered a little bit in Friday's session, but it had been seeing some weakness. Another thing is called ease of movement. This is the path of least resistance. It doesn't really take volume into account per se. It's just saying, does price have a tendency to go up easier or down easier? And this attempts to measure that. Looking at one day, this just measures from Thursday to Friday's session, because a lot of times when we get a real extreme reading, we've exhausted ourselves in the short term. I look at more of the bottom figure. This is based on 14 periods, and when we're above zero, that's more positive. When we're below it, that's more negative. And then sometimes we can get some pretty extreme readings from this, so it can also act like an oscillator. Another oscillator that I do use is the ultimate oscillator. When we're above 50, more positive. When we're below, more negative. Also looking for extreme positive and extreme negative readings. The money flowing index, pretty much the same thing. Above 50, positive, looking for extreme, looking for extreme. And if we drop below 50, that's turning more negative. The Sean trend meter, it's more neutral right now. We had become fairly positive with this. When we get really excited with this indicator is when it gives us really extreme readings to the upside or the downside. Moving average study. A lot of times I'll include this because when we really move in one direction or the other, especially this 20-period exponential moving average, it can get extreme positive or negative fairly quickly. We tend to just look at the direction. If we're headed down, that's more negative. If we're turning back up, that's more positive. And then we look for some kind of an extreme reading with the 20, 50, and 200-day exponential moving averages. Advanced decline ratio, when we're above 0 and advancing, that's positive. Below 0 and declining, that's negative. Also looking for extreme readings, either positive or negative. The PMO, it's one of our oscillators that we look at. Probably the one that I use most often. When it's going up, that's more positive, but we can break this down. There's a way to just calculate this based on price and volume, and sometimes this will actually lead and give us a crossover signal before the PMO kicks into gear. This is a PMO study where it looks at the PMOs that are rising, the percent of stocks inside the S&P, and also the percent of buy signals and the percent of those PMOs that are above 0. Then here's all of our different oscillators. Sometimes I'll include these in almost every video, and then I'll go a long period of time and not include them, where we're still positive overall, but with the weakness earlier in the week, these are starting to roll over, but they haven't crossed over negative, at least yet. Then there's some other oscillators that I use, a CCI based on 14 periods. Again, the same basic principle, above 0 positive, below 0 negative, extreme positive or negative. And the same thing is true with a 20 period. So same indicator, just using different calculation periods. Also looking for extreme positive or negative with the percent B indicator. This is based on the Bollinger Bands. If you look up top where the price chart is, when we get outside of the upper band, this gives us an extreme positive reading. When we get down below the lower band, that gives us an extreme negative reading. And that just likely means that we've gone in one direction or the other too far, too fast. Balance of power, fairly simple with this one. When we're above the dashed line positive, below the dashed line negative. And then how far we are away from the 200-day simple moving average. That's pretty self-explanatory. The TTM squeeze, another oscillator-based trading system, where when the lines are a little bit darker and then eventually cross over from red to blue, and then when you see these green little dots in the middle, that's a pretty substantial signal. But then when we see the red dots, market's getting a little dicey at that point. And then this goes a little bit counterintuitive because when the market's really moving, we might see these bars actually turn darker. You would think it would be the other way around, but the person who designed this decided to make them a little bit lighter. And then the Heikin Ashi, this is a variation of plotting price charts. And this just is currently giving us a doji signal. And if you think about it, the S&P was down 0.66% on the week. So it's really kind of indecisive right now. Another thing is called a Kagi chart. When it's a black line and advancing, that's positive. When it's a red line and declining, that's negative. Currently, we're positive. The Renko, open box is positive, red box is negative. We're currently positive. 3-line break, open candles positive, black candles negative. Currently, we're registering a black candle. Point and figure, this doesn't take into account time. It just measures how far does price move, either up or down. When it moves a substantial manner to the upside, we get an X. When it moves a substantial manner to the downside, we get an O, and then this forms patterns that sometimes are helpful. Currently, on the 9th of January, it gave us a low polar reversal. It's green, so that's a positive signal, and we're currently working off of that and then waiting for more X's or O's to be drawn and seeing what kind of a signal is generated. Some different trading systems. This is the go, no-go system. It's an out-of-the-box trading system. When it says go, you go long. When it's no go, you sell a long position, or you could potentially go short at that point. It's kind of going all over the place. And as we were chopping around, going sideways, we would go from light purple to deep purple. And then we climbed up. Then we had a series of brown bars that didn't really trust what was going on. And just about the time we had the big down day was when this was getting ready to go positive. And now we switched back more to brown, so that's more neutral. Some long-term charts, we have a long-term rainbow, the 50 through the 250. Moving averages, again, in a good solid uptrend, we'll see all of the lines moving uniform with each other. In choppy environments, we'll see spaghetti mess here. And then Special K, a very long-term oscillator. I don't include this in our oscillator list. When we're above the red line, that's more positive. When we're below it, that's more negative. We switched over to negative in early 2022, and we've been negative ever since, trying to show some improvement here, but the moving average is declining, even though we're turning back up, and it won't be a positive signal until this actually crosses. Then I do a longer term moving average study. The longer term is mainly the middle and the bottom part of this chart. The 50, we have a lot of other studies that use that, but this is just to give us a reference point. When we get extreme positive or negative, we use this like an oscillator above or below the midpoint. And currently, we've been declining with both of these, but we turned back up after Friday's session. Looking at some other indications, the NASDAQ 100, we have the VIX that applies to the S&P 500. Well, this is the VIXN, which applies to the NASDAQ 100. And this chart on top is kind of scary looking. It's a bar chart, and it looks more like icicles hanging from a tree. But we've been declining overall. And even though we saw some weakness earlier in the week, this still is declining. And we're also seeing the closing values. That's what the line chart is. They're also showing a decline. So we're seeing a lot of complacency, both in the S&P 500 and the NASDAQ 100, based on the VIX and the VIXN. We look at other charts like the equity put call ratio, and they're kind of giving us the opposite indication right now. This is just all of the different charts looking at the yield curve, the 10 to the 2-year, which is still inverted, the 10 to the 3-month, which was the last one to go inverted, and now it's the most inverted chart. The 30 to the 5-year is currently no longer inverted. It's just a little bit above zero. The 10 to the 5 is also inverted. And then at the bottom, I don't really use this one. It would be nice if I could, but the data in this chart doesn't update all that much. So it's really hard to get anything from this particular chart. Some rate of change charts, I don't have all of them here, but we just look at the rate of change 1. If we have a really strong up or down day, we'll quite often see an extreme positive or negative reading. That means that we likely overdid it and could see some exhaustion in the next period. Then another one going way out looks at the rate of change going back 250 periods. This is the longest rate of change chart that I have, and I have 2 of these. This is going back to 1980, when we get down to a pretty low level, and this is where we got in the COVID low, and we're trying to bounce up off of that. So that could give some long-term support. However, we did go lower than this back in 2008 into 2009 before we bottomed and came up out of that. And then here's another shorter version of that same chart just to get more of an in-depth view of what's happening. This is actually matching up closer to the COVID low and trying to bounce up from that low. And then I have a series of possible positive scenarios. They come in and out of favor. If we're going up, I tend to focus on them. If we're going down and we hit some kind of an extreme reading, then I show them in the videos. Otherwise, I just kind of talk about them and just bring them up from time to time. I don't have all of the charts here because I did use some of those in the video. But this first one is a 19-day exponential moving average of the advanced decline ratio for the S&P. And we can calculate this based on price. And when we get an extreme negative reading and then start to come up out of that, that can give support to the S&P. The same thing is true with volume. And we got more of an extreme negative reading, and we almost got an extreme positive reading here. But we didn't see a confirmation of that based on price. And that's another reason why we use both of these. If we're only getting one and not the other, we're a little bit suspicious of that. Then here's another one that you might see in the daily videos quite often. This is the percent of S&P 500 stocks that are above the 200-day simple moving average. When we get an extreme negative reading and then come up out of that, a lot of times that will mark a low in the S&P. Then we do the same thing with the 50-period moving average and then the mid caps and the small caps. When we're seeing negative signals with all 3 of those indexes together and then moving up out of that, that gives us a little bit more support that prices are actually going to bounce. Thank you. I hope that you found this helpful. I tried to take a little extra time to explain some of these charts. And in my class, I spend a lot of time going through all the different charts. But I hope you have a really good day. Please feel free to check out the daily brief that I do. I have a weekly video posted as well as the intermarket analysis video. And I will talk to you in the next video.